Today's market call is brought to you by MoneyLion, the first digital ecosystem for consumer finance, empowering everyone to make their best financial decisions. Glorious day in terms of weather here on the East Coast on this Monday, October the 6th, 11 a.m. market call. Dan, Nathan, Guy, Adami, excuse me, soon to be joined by Carter Worth. We have some interesting things to discuss today, but let's first start by discussing the fate of New York sports. The New York Giants fell to the lowly New Orleans Saints in a game that, quite frankly, doesn't really matter, but it's a game that they should have won, obviously did not. And then the Jets, once again, embarrassed themselves playing Jet football. As I say, maybe they should try to do something else. Patriots, by the way, as I mentioned, are playing Patriot football. And, of course, the Yankees, I don't know what to say. Hello, Dan.
Hi, Guy. You made a choice today. I just want to speak about this choice before we get
my sweater.
No, you got this Johnny Cash look, and I'm totally down with it. I'll bet you're wearing some black dungarees. The choice is the double button. The choice is
I can unbutton it if you want.
I'm
not. What am I, like Engelbert Humperdinck?
No, but you
want me to unbutton it? You want me to take it off?
All I'm saying is you made a choice, because I know that head of yours does not fit through that hole on the top if both buttons are buttoned. Okay?
No, of course not.
So you're sitting there,
it's undone, and then I
put
it on, and then I button it.
Why wouldn't would you do this like on a all right?
Because people don't want to see. They don't want it. They don't want this is animal.
Oh, geez. All right, now we can't unsee that.
Well, you listen. Let me just tell you something, Amanda. By the way, Amanda's great. I didn't bring that up. Back to you.
All right, 8:45. You and I do our normal call, right? Just taking stock. See what I did there? Taking stock of what's going on in the market pre-opening. Today was one of those pre-openings where there was plenty going on. We're going to hit AMD and the whole semi-complex, and Carter's going to help us do that. By the way, Carter Braxton Worth is going to be with us in a few minutes. Let's just talk about what you said to me first before you even talked about AMD. You said Paul Tudor Jones, and for some of you out there, legendary investor, right? What did he say here, Guy? He said we are setting up for what could be a blow off top. And when you say blow off top, who knows when it tops out? You're never going to know. No one's going to figure that one out, right? Like a stock like AMD going up like this, you know how many stocks, and I know you know, did this in late 99 where they just went parabolic, right? And so this is the sort of sentiment. I guess we're going to talk about it from a sentiment standpoint. It's just impossible to gauge. So how do you keep riding this train? You'd say, well, I want to pick the next stock that's going to get an investment in a multi-billion-dollar order that's underappreciated, but it's really hard to figure that out.
No, and when Paul Tudor Jones speaks, people should listen. They, again, as I've said countless times, you don't have to agree with him, but you should listen to him. And he will be quick to say, what he's talking about is, again, not a timing indicator. But if you really watch that interview closely, which I did, and listen to him, I mean, he is clearly concerned about some of the largesse going on and some of the enthusiasm around the market. And he was quick to point a lot of those things out to Andrew. So he will tell you, again, he's not trying to time the market, but there are levels of concern in his voice that, should be somewhat alarming. Now, that comes on the heels of a lot of other people saying very similar things. David Solomon, I don't know where exactly he was, but he did an interview recently, I think it was last week, and he voiced similar concerns. Obviously, Jamie Dimon for a while. There's a laundry list of people, throw Stevie Cohen in there, that have been concerned for some of the same reasons that we have been, but the market continues to do its thing. And the enthusiasm around this deal clearly has got things, once again on the move higher. We'll see how it all plays out. But to your earlier point, how do you pick the next one? Well, I mean, I think a lot of people are looking to Intel and say, okay, this is the next obvious one. I am not as certain as that. But Intel's up, almost 100% ish from its recent low, which is, again, just remarkable.
You just said something fascinating, and it's not something that I actually thought of when we're seeing this AMD, we're seeing the whole semi-complex. And again, Carter's going to come on and we're going to look at the charts. So the Intel is up almost 100% because the government took a stake, then NVIDIA took a stake, then there was rumors that Apple was going to take a stake. And then you would suspect that the next thing that happens is that they're going to get a big order from NVIDIA,
Right.
from Apple,
That's right.
that sort of thing. So the question is that stock on its way to 65 if it gets multi-billion-dollar orders? Because they've seen revenues drop, I want to say, year over year for the last few years. Let me just do that. So the question might be, like, how do you chase this stock trying to wait for a big order? They don't really have the foundry capacity yet to build billions of dollars of chips for somebody like NVIDIA. And then you have to start asking yourself, what does that mean for Taiwan Semi?
Mm-hmm.
NVIDIA's foundries get a huge order from an NVIDIA, forget, an AMD or something like that, but NVIDIA is the one. What does that mean for Taiwan Semi? Maybe they can pull up Taiwan Semi for a second here, because this is a company that's been making 90% of NVIDIA's high-end GPUs. And you'd say to yourself, look at that. I mean, that's insane.
It's like partying.
What happened? It is partying. What where's this stock go back to I don't know, you know what I mean, 240 or something?
Yeah.
Like
so I'm glad we have so let's do one thing at a time. Let's pull up Intel real quick, because Amanda or Jacob, who's ever running this boat, go back to that prior high in April of 2021, and my eye sees a downtrend line that we're probably right up against right now. So you'd put that high up from the spring of 21. You connect the next high, which was late 23, early 24. And the third point is probably right around where we're currently trading. So draw that trend line and we'll see how it looks. But that's what I'm looking at right now. Yeah.
And the other point I would say is that, revenues for Intel peak were 2021, 22, 63 billion. That is a massive drop. And then 54 billion in 23, 53 billion in 24, expected to be 52 billion in now let's be clear, if they were to get a big order, it's not like they're going to show all of that's going to show up in 2026. So it's supposed to go back to 54 in 2026. So the question is this a company that swung into an earnings loss last year? Just think about that, right? Like, think about just the earnings degradation, and that's poor execution, a whole host of different things, changing strategies and CEOs and all that sort of stuff. So again, I think I'm going to sound like an idiot here. I think you'd have to be like, have your head checked to chase Intel here, because you're waiting for some massive contract. But to your point, that's probably what comes next. All right. Carter Worth of Worth Charting, our dear friend, is going to come in here and he's going to help us think about the semis here a little bit. Hey, Carter, what's up?
Hello, guys. How are you?
We're doing great. Just first things first, before we chart anything, you walk in on a Monday morning, you see a stock like AMD up 30%. You say to yourself, oh, this stock's getting taken over, right? Like, who's buying them? No one's buying them. They just got a big order. Like, what does that sort of behavior tell you? This is not a small company anymore.
Right. Well, we've certainly had outsized moves. Get them all the time, news related kind of thing with the market cap, things like Google when it popped, and Oracle. It is a lot of money moving around, pushing big and mega cap, super cap stocks higher as though they were small, mid cap, and Russell 2000 stocks. But it speaks to animal spirits, that very sort of hard to define, but everyone knows what it means because of the words in the two word phrase. And yet here we are, the opening print's the high print, and it's been fading ever since. And so we have it everywhere. You have WDC, a highly cyclical business that is going to earn this year the same amount of money it earned 10 years, 15 years ago. It's all about the future. Maybe they earn more, of course, but steep and uncorrected is a phrase I learned from my teacher mentor. It's very simple. It's elegant, steep and uncorrected. And that's what we have in a lot of stocks, STX or LRCX, or of course, WDC and others. And Advanced Micro is the flavor of the day.
Yeah. Feels as though the market is saying, Carter, everybody's going to win in this new AI era. And I think what we've learned over the years is there will be winners, but almost by definition, everybody can't win. And, that's a comment that I think Roger McNamee made a week and a half ago. Dan, I think we put the op-ed that he wrote in one of the show notes of one of our shows. But, look at it through that lens in terms of just right now, the market is saying everybody in the pool because everybody wins.
Yeah. And Carter, I mean, that's the sort of stuff, and we just talked about it for like a minute or so, is like, a blow off top. I mean, these are the same people though, all these huge investors. You remember in the throes of the April after we had the V reversal? I mean, there were like 5 or 6 of them, without naming names, because I don't think we can remember all of them, but they were saying that like this is going to be a really tough slog. The idea that the markets could recover, all the way back to those prior February highs did not seem likely. I think in some ways it's kind of unfortunate that we don't get to hear from these people on a monthly basis. They drop in on Squawk Box, they say their bit, they sound really smart. A lot of people, like take it to heart, what they're saying. And so we never saw any of these, folks say, all right, well, I was wrong. You know what I mean? Like, we're moving on, like we're off to the races.
Well, it's a Wall Street convention, right? To have a top down, known as a strategist, or often it was economists and now strategists who will give you it's a comfort blanket. Where will the market be in 12 months? Who the hell cares? If you went back 100 years or more, the curbside trading, no one's talking about the Dow and where it will be. They're just saying, how's my stock Alcoa doing? How's my stock International Paper, Bethlehem Steel? I'm trading, trying to buy or sell, make money. But this is, as it's moved to wealth management and advisory and less trading per se, it's all about, well, what do you think of the asset of equities and what do you believe? But there were 5 or 6 sell-side firms, major firms, who downgraded the market, lowering their price target, which is to say responding to price, not predicting it, when the market sold off in April, all of which are now raising their price target. It's a silly thing. What does it mean? Okay, who cares where it closed? What about 13 months? What about 11? I mean, none of it matters. What we do know is it's been a lot of buying since the April low, as there was a lot of selling from the February peak into the April low. And sometimes you get these big reversals. It's a V bottom, if you will, on an intermediate basis. And it is as loved now as it was hated in the first week of April.
All right, let's take a look at AMD, because it's stock that trades about 43 million shares a day. I don't have it in front of me. Dan does, probably has traded that already. We're looking at levels that we last saw in, I think, March of 2024, obviously created this huge gap open higher. Does this say it? Look, I look at this thing, especially if you have a huge volume day, especially if it stalls at some point today. By the way, I think the high today was 226 or something. Not that that matters. It's trading 208 now. But, just when you look at this, what does your eye say to you?
Well, the first thing is it's always, why did it stop at that level? There's today's high, which was 226.71, versus the high of March of this year. That was 227.30. You're talking about 60, 70 cent difference. Why did it stop there? There's no PE level that matters. There's no price of sales, enterprise value, EBITDA. Levels on charts matter. You often go right to a former high or former low, and then you respond to that. And so I have a lot of friends, speaking of Mr. Solomon, having grown up here in Manhattan, who are investment banking, and often when they're trying to decide when they are making we're going to try a buyout of this company, where are you going to put the price? And they'll say, well, a price that no one will be unhappy at the former high. Then there won't be anybody who would hold out. And so it stops here at this high pre-tariff sell-off. And I would, at this moment, bet against volatility, right? So it's been highly volatile, and it's not likely to give this all back anytime soon, and nor is it likely to start print 240, 250. The news is out, and the news has been deemed to be worth something, but not as high as it was right here at 226. Because guess what? If today's high was 226.70, it's trading at 209 now. If there was more in it, it would be 250, 260 right now. Yeah. So the market has spoken. 158 million shares have already changed hands, and I would sell calls against the long or trim. Yeah. If one is so fortunate to wake up and have, this is what's called force majeure, right? An act of God, a news out of nowhere. Oh my God, we've all had it. You look in your P&L, like, something really good happened. Book some of it.
Yeah. And I'm in the camp with some of these gaps, the force majeure gaps, like the Oracle. I mean, I really do believe they're going to fill in a lot of them. I'd be hard pressed to think that they take out those prior highs anytime soon. And that's how I continue to play it. But to your point about selling premium, I mean, we did this in Oracle, and the idea of kind of, let's say, buying, something like a butterfly, which is, you basically buy a put, you sell two, let's say a put butterfly, at a level that you think it can go to. That worked out really well. And, if we were to do that, if we were kind of rallying back a little bit, like throughout the day, I might do that and target that kind of 180 level, which is the recent prior high, or I might look to do a put calendar, because that also achieves what you're talking about a little bit, that the vol slows down. But that is what it is. Last thing, David Solomon, as a pure investment bank, for the most part, they do great in trading, and that's a big business for them. But, for him, I would think that you want the NASDAQ to stay elevated. You want to do all this M&A.
Well, sure. And all the circuits are, they're all turned on. But let's just address that, because it's important. We all get up in the bed in the morning, put our pants on the same way. You have to stay in your lane. It's very important. And what they say, smart people know what they don't know. Now, if you've been in the public equities market as a trader, like Stanley Druckenmiller or Louis Bacon your whole life. Now, Mr. Solomon is an investment banker. Okay. He was in junk bonds at Bear Stearns, and then he is basically, what does he know about the real trading of equities? Maybe he's done a little bit for his personal account, but he, let's just be clear, to say that there might be a drawdown in the next 12 to 24 months. Oh, really? Thank you. Come on. That doesn't help. I kept a quote from an article, and it first was in Boston, working at Dean Winter. It's important in my pocket. And it was someone in Wall Street Journal and said, if the market, this is a direct quote, I memorized it. If the market cannot gather steam to move higher here in the next couple of weeks, it can be expected to continue to go sideways or trade down. Yeah. So wait a minute, if the market doesn't go up, it'll go sideways or down. That's a direct quote. It was Dean Winter. For those who are in the category of my age and higher. No, thank you. Yeah, no, thank you.
All right, listen, I know you got to go in a couple minutes. Let's run through your charts, because I find them fascinating, Carter. I'll leave it up to you.
A breakout, but also fairly far above trend. Next iteration, there's the 150-day. Let's get a little bit longer term. Same chart, same lines, and then even longer. Let's go even all data. Now, this is the all data charts. This Philadelphia semiconductor goes back to 1994. Is it as steep as it was in the dot-com era? No, but it is about as far above that blue line as you get before you get some sort of pullback. So often speaking of blow-offs, you get a news-related thing in a big name, and that just sort of rings a bell of sorts. Doesn't mean it has to crash, but no, do you buy more of this chart, sell some, sell a lot, right? Or just sit and ride? That's reasonable, but I would be trimming.
Yeah.
And this is important. This speaks to this. This is a ratio chart. It's the relative performance of the SOX index since inception to the S&P. So if you've just done a little bit better than the S&P, you've recouped all the losses associated with the dot-com peak, but with much higher beta, then you start to look at Sharpe ratios and Trainer ratios. The risk-adjusted return of this aggregation is very poor. Now let's look at this final chart. Now, this is the real sad part. This highly cyclical area within technology, this is the relative performance to its true peers. It's the tech sector. So now you got to go and do a foot race, not against the S&P, which has things like DuPont and Dow in it. It has it has Apple, it has Microsoft, et cetera, and so forth. It is highly likely that the SOX, I would make a bet on this, will never return to a relative all-time peak associated with the 1995 high, and then the double top in 2001. Think of this. Think how bad that is.
Yeah.
So that's like when you're sitting around and people talk about that. The dot, and look, man, how much money? Everyone's at the barbecue. I'm up 12% this year. Everyone else is up 30.
Yeah.
Dude, what happened? Yeah, this is relative. This is where alpha goes to die.
I know that. And, one of the things I just say, because we just talked about the euphoria in semis, we're never going to be able to kind of nail the top. But to your point about the relative performance here, this is a group that I really want to go after when you think that it starts to kind of top out. Let's say the news flow really changes. Let's just say the sentiment towards it, because people are like, it can't get any better. OpenAI is giving a huge order to AMD, and they're basically also taking a stake. But what did we learn a couple weeks ago? Oh, NVIDIA they invested $100 billion in OpenAI. I mean, the list goes on and on and on about what's going on here. So, Microsoft has a stake in OpenAI. I mean, so it just seems like there's a lot of goofiness. We don't have to get in to that right now. Last thing, Carter, semis versus software. This is a theme that you've talked about for a while, and it's just give us a good sense of kind of how these two sectors are lining up versus each other.
Right, and in many ways, the long-term chart of semis versus technology is the story of semis versus software, with Microsoft and others being such big constituents. But this is a shorter-term chart because there's not a lot of history in the IGV. But here we have, again, a fairly analyzable situation. Which is to say, semis have been outperforming software, at least as measured by these two ETFs, SMH and IGV, since 2019. And we've responded to the trend line and bounced to the penny over and over and over. So the question is this current bounce, which is in response to the tariff sell-off, and you just see the beta in semis relative to IGV, does this bounce carry to the point where we can recoup the highs of 2024, or is this V getting a little stretched? I would say it's getting a little stretched.
Yeah. And so if we were to get back to those prior highs, just be really clear for our viewer here, which is the one, if you are bearish, which is the one that you want to take back to that, uptrend, because that's how you trade a relative chart like this.
Right. So if one was making the bet that the brown line has bounced a little too much here, right, then you're making the bet that semis will underperform IGV as a pair.
Okay. I just want to be really clear about that. Carter Braxton Worth, we really appreciate you being here, my man. Thank you so much. You guys know where to find him, worthcharting.com. Hey, Guy, Carter just brought up something really interesting, and we talk about this all the time, the construction of ETFs. And I think this gives us a good opportunity to kind of look at this. So let's pull up the SMH, and you and I go back and forth. He just used for semis, the Philly semi index. That is an index. It is not an ETF. The SMH is really the widely traded ETF. And I think Amanda has the members and their weighting of the SMH. So look at that, right? So we're basically at 28% of this ETF is NVIDIA, and it's Taiwan Semi. And we showed you the charts, at least of Taiwan Semi, and you can know what's going on in NVIDIA. It's up 38% on the year. Taiwan Semi is up 56% on the year. Broadcom is obviously also a huge contributor. That's up 50% of the year. So let's just talk about, if you're trading the semis, knowing what is within these ETFs, because it is a concentrated bet on a handful of stocks.
100%. Well, those two specifically, throw Broadcom in, and the rest are almost the same. So, yeah, I mean, look, I don't think this is the best constructed ETF. We have talked about it, which is why we've then gone to the SOX, but it's not as bad as some of the other ones we've seen. But with that said, if you're in the SMH, I think you pretty much know what your bets are. I mean, it's a sort of a watered down version of NVIDIA and Taiwan Semi, which, by the way, has worked pretty well. You showed me that Taiwan Semi chart just a few minutes ago. But, this isn't even the one that sort of sticks out to me, because although, again, skewed, it's not nearly as skewed as sort of like the XLY. So let's go to that. That, to me, is one of the worst ones out there, because this is 42% of two names, basically, Amazon and Tesla. Now, we can debate whether or not Tesla should be in there in the first place, but I think it's safe to say that, again, you look at this and say, wait a second, this doesn't really necessarily encompass sort of the exposure that I want to have when I'm so skewed to those two names. And then the rest sort of fall into line, and the rest actually do sort of make a little bit of sense. So, you got to understand what you own, I guess, is the point. And you think you're safe in ETFs. And by the way, when they're going higher, that's great. But one of the points that Paul Tudor Jones made was sort of these leveraged ETFs and all the leverage out there around these things. And, his concern was it's great on the way up, but, on the way down, things get dicey pretty quickly, especially when you have weights like this.
Yeah. And so if you're looking to get, exposure to consumer discretionary, I mean, to me, I don't think Tesla represents the space the way a Home Depot does, or the way, a McDonald's or some of these other names that are more retail oriented. So to me, they don't really give me a whole heck of a lot of, exposure, in my opinion, if I'm really trying to drill down on these names based on, let's say, some macro factors and the like. So again, I think you just said it. knowing what you own. Sometimes ETFs are a great way to get broad exposure to certain areas of the market, and sometimes they are not. Let's hit something that I think, is we've been talking about the regional banks. We've been talking about the large money center banks. One of the big exciting things when, the administration came into power late last year, early this year, at least from an investment standpoint, was regional banks. It was the idea that we would have some deregulation, allowing these companies an easy path towards consolidation, right? M&A. So this morning we have a headline that Fifth Third is buying competitor Comerica. And if you're a manager or you're a CEO of Fifth Third, you're saying to yourself, this is going to be a good time, right, to do this sort of acquisition, even though it might give me unfair sort of power within certain regions and the like here. So talk to me a little bit about how you're thinking about this. Is this deal, for one, competitive reasons, likely to kind of trip off a whole set of other potential deal makings, and then partially also because of the idea that these are not going to be, or at least face a lot of opposition from regulators and maybe a quick path towards approval?
This is what the market's been hoping for a while. Deregulation, M&A activity in the small and regional bank space. And obviously you got probably one of the biggest ones in a while, announcement today. Now, the question you have to ask, I think, is, are they doing it the right time in the cycle, or are they sort of top ticking this thing? Now, I understand what's going on here. It's a race to get deposits. These smaller banks, if they're looking to compete with the big boys, they're not going to grow organically. So you're going to grow by acquisition. And I think that's what we're seeing here. But again, the question is, are we in the right time of the cycle? I mean, if we are on the precipice of a downturn, you can make an argument that, maybe this is not the best time to be going after assets and to be sort of paying up for competitors or things that make sense in terms of tack-ons in the space. So, the IWM is probably making new all-time high today. We're probably through the levels that we saw in November of 2021, which makes sense. They're heavily skewed towards small and regional banks. But again, the question I think the market participants should be asking, is it the right timing for this, or is it the exact wrong timing for this? Time will tell. I'm in the wrong timing camp.
Yeah. Well, you look at that chart there and you say to yourself, you see that uptrend, you see that flat 150-day moving average. And I'm surprised that we're not seeing a move back towards those recent highs, which kind of gets you to what, $67 or something like that. So this will be an important one to keep an eye on. If we give back a lot of today's gains and then we're like kind of contending with that uptrend, that would be interesting if it were to make a move back towards that flat, 150-day. The 200 is probably around 158 or something like that, and we see this 150 at like 59 in change. Let's hit the dollar, and this is one where I just drew this kind of double bottom. You see that that brings us back, and we'll pull this one out. I mean, we are below the April lows, right? And then you see this sort of mini consolidation. You see that downtrend. You see how we're above that, right? And maybe we're making a little bit of a flag. This is one where maybe the positioning, we've had plenty of strategists actually on the Risk Reversal podcast talk to us about this, that the positioning has been super bearish. The narrative has been super bearish for the dollar. Might we see this bearish to bullish reversal, guy?
Well, that's what you're looking at now. And that was a point that you had made a while back, and Carter had made the same point, and it looked like it was going to be right. Then the dollar did this sort of back and fill. Again, the DXY, I think it's a basket of about 6 currency, obviously skewed to the euro, but you got the yen, the British pound, I think the Canadian dollar's in there, believe it or not, the Swedish kroner and the Swiss franc. So the reason why it's getting off the mat today specifically is you have dollar yen at levels we haven't seen in quite some time. I mean, 150 in dollar yen probably puts us to levels that we last saw in, middle of July or so. So I think the market is looking at that. We have some questions about dollar yen and what's going on in Japan, elections in Japan. You have a weakening currency. You have yields going higher. There are things happening in Japan that we should be paying more attention to, but it's hard to make that argument when you have a Nikkei making all-time highs and when you have the S&P 500 making all-time highs. So, that's part of this puzzle right now. If you think the dollar is going to continue to strengthen against the yen, and the euro just sort of treads water, well, that DXY is going to continue to grind higher. If you think something else is going on here, which I do, I do think there's going to be at some point continued weakness in the dollar against all these major currencies. So we'll see. I mean, with that said, you throw the bond market in today, and you have a bit of a sell-off in the bond market. Yields back to about 415. So there's a lot of cross currents here, Dan.
Yeah, and so the TLT, I know Amanda's bringing up right here. So if you look at this, I mean, it's flat-ish, if you will, but you think it goes higher. Yields go lower.
I think the TLT is headed back down. I mean, go longer term and sort of this 82.5, 83 level that we sort of stopped at and bounced off of, but not in a meaningful way. I think we're going to take those levels out. I am in a vast minority of people that think that. But, with that said, that's what I think.
Yeah, and I got that turned around a little bit because I know Carter is in the other way.
He's the other way. He thinks TLT goes higher
and yields lower. And I will say, I mean, we're kind of stuck here above that 150-day moving average, right? And so you could make the argument that it looks like the dollar, if it's going higher, you might expect yields to go higher too. Last thing on this front, let's bring up Bitcoin, Guy, because you and I had been talking about like this kind of relative underperformance to gold as gold was making new highs on a daily basis here. Now, you could also say that, if we go back on a 5-year chart of Bitcoin, we've highlighted this a lot. I mean, the story of Bitcoin over the last, 3 years or so have been these, like kind of parabolic moves higher, consolidations, then another one. We are breaking out possibly of this recent consolidation or so. It finally joined the gold party. But you would say to yourself, if the dollar is going to move meaningfully higher, when I say meaningfully, a few percent or something like that, might you see a pullback in gold and nerd gold?
Yeah, well, look, let's just, since you mentioned gold, I mean, it's having a day again. I mean, every day we wake up, I mean, typically factors or forces that work against gold are no longer really having any impact whatsoever. And you look at it and say, what is the gold market trying to tell the rest of us? And that's something I've struggled with for a while, because obviously I think it's trying to portend some bad things in the equity market. And every day that we make a new all-time high, that's not the case. But gold makes a new all-time high every day. And this is with, again, to your earlier point, the dollar rallying. So now you go to Bitcoin. Yes, obviously playing catch up here, new all-time highs. But, this goes back to something Jim Chanos talked about, and he is implementing the Michael Saylor strategy of strategy. And if you look at it, Bitcoin's at an all-time high. We've just established that. The S&P 500, it is an all-time high. We just established that. So why is MSTR trading relatively as poorly as it is? Now, it's bounced today, but it's nowhere near its prior all-time high. And what Jim Chanos has been doing, and to a certain extent what Michael Saylor has been doing, they're shorting the stock and getting along Bitcoin. And that's been a winning strategy, Dan.
Yeah, it's kind of brilliant. I know that Chanos caught some shit, you know what I mean, for the micro strategy crew, the people who kind of really believe in the strategy. And he's like, no pun intended. Well, no pun intended. He's like, listen, I'm just doing the same thing the company's doing, right? Like, which I kind of love. Let's just flash this up really quickly, Guy, because as Bitcoin makes new highs, we're seeing there was a bunch of recent IPOs. We had Circle, we had Bullish, we had Figure. These are all more in the exchange space as it relates to crypto. And they also, Coinbase is in there too, because that's kind of like the OG. That's a phrase you use a lot, but
actually.
No. So Gemini, Gemini and Figure, which had kind of been laggards since their IPOs, they had huge runs that came in, that sort of thing. But it is worth noting that Robinhood, and we're just going to really emphasize the Schwab, Amanda, just let's have that up twice, are not rallying. The more
she was just saying if we were paying attention, she's
excited. She's excited about Schwab, but there's not a whole heck of a lot of appreciation. And then the last thing, I just want to go back to one thing, because when we look at stocks that are kind of, tracking some of the headlines that are going on here, if you look at what's like these neo clouds, Guy, the CoreWeave and the what is it? What the hell is this other one? That's up a lot. This Nebulous or some shit like that. Nebulous. these stocks, like look at CoreWeave, it's not breaking out of that range. You know what I mean? And so you would think if AMD is getting this massive order, right? Well, OpenAI, which is kind of trying to get compute for wherever they can, you know what I mean? Like you'd think that CoreWeave and Nebius is getting the benefit of this. So they don't trade particularly well. I just wanted to highlight that. Anything, Guy, before we get out
real quick. I mean, there are other names: quantum computing, QUBT, SoundHound is another one, and Rigetti is the one everybody loves. Rigetti is now a $13 billion company. That's RGTI. Pull that up real quick and see what revenues they're going to do on that market cap, because I think you're going to be shocked at, in terms of, again, price to sales and where we are in terms of historic norms.
Yeah, no doubt. I mean, like those things, I got no idea what's going on. You remember like earlier this year, or maybe it was late last year. It was last year that, Alphabet, Google had this big gap, and the headline was, I think it was like 5% or something like that, that they made some big breakthrough in quantum computing. Do you remember that? And then it kind of filled in that gap. So all of these companies, these are not, what's the ticker on this? RGTI.
Rigetti.
These
not
are
Dave.
Yeah.
No, I mentioned it because this is a company that's going to do $20 million.
Yeah.
$20 million in revenue next year. They lose money. That's fine. A lot of companies lose money. $20 million. They're trading at a $13 billion market cap. Listen, again, I mean, as you say all the time, have at it, people. Maybe it grows into that, but that's insane to me.
Yeah. Well, I mean, this is part of the whole thing. And I saw Torsten Slok, and the headline, this is from Apollo and his daily. The headline is like, this is starting to feel a lot like 2021. Now, this doesn't have to do with the equity market. He said, looking at annualized month-over-month growth rates shows 60% of items in the CPI basket. Okay, but this is important. You might have something to say about this CPI basket, which is obviously inflation, but we're not going to get most likely a inflation reading. That would be next week, as long as the government is still shut down. It's growing faster than 3%. See the chart below, and a second inflation mountain is a second inflation mountain emerging. And we'll put this in. Look at these guys, Guy. I mean,
Johnny on the spot.
What? So let's just say this. Let's just say in a few months, okay? Let's just say that rising inflation is more important than a jobs, a labor picture that supposedly is weakening dramatically, which it might be, but we're not going to know until we get the data. Guy, are we going to get the September jobs report? Let's just say the government reopens in a week and a half or something. Are they going to put all this data out? Do you know that?
I think they have to. I mean, listen, look, I don't know. I'm not a BLS person, so I don't know. But my sense is they're going to have to provide it at some point because the data's still there, just people not in the seats. So yeah, I think you're going to have to get it if and when. And the if and when is the interesting part. It looks like, I think midweek, at least this week, seems to be a foregone conclusion about this thing continuing, and then we'll see what happens on the back end. Monday is Columbus Day, I think, so I don't think a lot happens there. Next thing you know, you wake up, you're in the middle of October. So there you go. And real quick, and I don't want to sort of belabor this, but think about quantum computing, which is a great name in this environment. It's a $4 billion company. They're going to do $2 million in revenue next year.
Yeah.
Now, you tell me. I mean, again. I mean, I don't know what to say. I mean, the market is paying up in a major way for these names.
Yeah, and it's a $4 billion market cap company. I mean, that's my kind of point. Torsten's talking about CPI basket going back to 2021. That's when inflation, Guy, was meant to be transitory.
Yeah.
To me, the equity markets and the enthusiasm, is something feeling like 2021. And if you think about what we just spent the last 40 minutes talking about, what were we talking about? We were talking about crazy moves in a semiconductor space that is very much tied to a huge secular theme that no one cares about, valuation. You know what that reminds me of? The metaverse, right? From 2021. And we saw all those stocks. What about all those work from home and all those whatever from homes? Those things went parabolic. Even things like, Snapchat and Roku, that was all part of it, right? They went parabolic. They gave back 90%. That felt like 2002 sort of stuff. If you think about crypto, remember that was the NFT craze, this consumer craze, the exchange craze. We just showed you what Bitcoin's doing. We just show you all the stocks that are related to it, and then just a broad market that you really had a hard time putting your finger on why it was going up and why no one cared about valuation. So this is why this period, forget the dot-com. Okay, I do believe that obviously there's things that are rhyming, but when you see market caps like this is predominantly multiple expansion on pieces of news, but these are massive companies. So might this be worse? A lot of people are saying, well, these companies make money, and these companies are monopolies, and these companies have huge moats, and these companies have great managements, and these companies have amazing balance sheets. Well, why the hell are they going to the debt markets like as much, why the heck are they making all these investments in other companies just so they can get orders? So I'll leave it at that. But the one thing I'll say is that if OpenAI is giving multi-billion-dollar orders in place of getting a 10% stake in the company, think about that. We've been talking, see what I just did here, guy? That's like a circular sort of thing. We've been talking about this for a couple months, and I'm not like saying that we were that early. We're pretty early on it, because to us, this seemed kind of obvious. If you have to buy, contracts by giving away your company, this is not too different than what's going on in MicroStrategy.
Well, I mean, that's my view on it. And, Jim Cramer has a different view. I saw him talking about it this morning with Lisa Su, and he brought up the fact that a lot of people brought up this vendor financing, and, I'm paraphrasing to a point, but he was not concerned nearly as much as, he didn't mention me, obviously, but, people that some of the naysayers. So we'll see. I just look around the landscape and I see, again, this vendor financing. I see these valuations, and I'm not making this up. I mean, Qubit is going to do $2 million in revenue next year. $2 million. I mean, people say, well, you have tremendous revenue growth. Okay, well, you better hope that revenue growth continues in perpetuity to justify the $4 billion valuation that it's trading at. It just, the market, to me, the market is making the same, I shouldn't say mistakes, but the market is doing very similar things that we've seen historically in terms of setting up for potentially a really disastrous move to the downside.
Yeah, and so if you don't have a lot of visibility on these orders, and it's just out in the ether, in the future, and you're an analyst and you're trying to model this in to justify your valuation that you're assigning, which relative to history and its peers in the market is just unjustifiable, there's gonna come a quarter. And it could be from NVIDIA, by the way, because they missed their data center number in this last quarter. There's going to come a quarter where they're well below consensus or somebody, right? And then everybody's going to have to take these numbers down, because they're going to be like, listen, they have all these great investments in all these startups. They have all these great investments in publicly traded companies. And that was basically in a way to get orders, right? Well, it's going to cascade. It's going to be like this sort of situation. So again, who knows when it happens? We'll just bookend it with what Paul Tudor Jones was saying this morning. Nobody knows. Might there be a blow off? Might it be in the form of Oracle and, this AMD situation? Maybe there's another Intel one coming. You know what I mean? So who knows, Guy Adami? Risk Reversal podcast this week. You have a special one at the end of the week. Danny Moses.
Yeah, looking forward to that. Me and Danny always have fun. So
yeah, and he's got a lot to say about all this. So check that out. We got a lot of good stuff between here and there. Guy and I will see you tomorrow on the Market Call. Thanks, everyone.